Hey, what's up, everybody? Welcome to episode number 93 here on season 1. Today, we are diving into, I'm new to Acorns, I'm 30 years old. What should I be doing for my investment portfolio? Which is honestly probably this question I can relate to the most. And I know, this question comes from Aaron, and he asks, hey, love the channel. Thank you. I appreciate the love. I'm new to Acorns, I'm 30, and I plan on putting $5 a day plus roundups. Which portfolio should I start using? I racked up $25 in roundups in the last 19 days. Roundups are awesome, by the way. Love roundups. And then $5 a day, so you're probably looking at, you're going to be putting probably around $200 a month into your account, which will be like $2,400 a year. So that's actually a really good investment. Aaron, so first of all, I want to just say thanks for the comment, man, and congratulations on starting to invest in your future. That's really awesome. It always means a lot when I get new people that comment on the channel and it's like, hey, I'm new. First of all, it's hard to say, you know what, I'm new to this. I don't know what I'm doing. What do you think I should be doing? And I think that shows a lot of transparency. So first of all, thank you, and then congratulations, man. And I will try to give you the best advice I can. It's my personal opinion, so you can take it or leave it. However, you got to make your own decisions on what you should do, and I'll try to lay the best options out that I can. So, for those of you who don't know, so I was going to just give you the I'm in college, and then I was like, well, he's not really in college, and then I'm like, then I was going to give you the I'm 40, but you're not really 40, so it's kind of like the I'm in between. So it's great because that's where I am. I am currently 27, and I am investing most of my money, or my account on Acorns is a moderately aggressive account. However, in the next 2 months, so October 31st or November 1st, I will switch that to a moderate account, and it'll stay there probably for the next 10 years. I don't plan on adjusting it after that. And the reason behind that is when I first opened Acorns, I was in the super aggressive account, and then I switched because I was reading that I needed to have some money in bonds, and I should have basically around the age that I am should be invested in the bonds. And I don't remember, I think I read that in an article online or something like that, and I was like, hey, that's probably good advice, I should probably do that. So I rebalanced to a moderately aggressive account when they had, I think, 25% in bonds or something, or 20% or something. And so I was like, okay, that's probably better. And then they had changed it in, I think, March or something, to drop it down to 16%. So I'm kind of stuck in this limbo period between waiting till a year to rebalance again and then not waiting till a year. So I'm only got 2 more months, and then I'm going to rebalance one more time, and it should be my final rebalance probably for the next 10 years or so. So anyways, so my recommendation for you would be to open up a moderate account. This is because this is going to allocate 30% of your money into bonds. So that's going to keep, so bonds, when you think about investing, think of stocks, bonds. Bonds are the safe zone. That money over there is safe. Yeah, you're not going to get as high of return over there, but it's safe. It's not safe, but it's more safe than having stock. So you want at least 30% over here, and then 20 or then 60% over here. So honestly, the books that I've been reading now, The Intelligent Investor and that kind of stuff, talks about having at least 25% of your money into bonds. So that's why I don't suggest on any of my videos, I won't suggest anything higher than 20, lower than 25%, unless you're 18. And I'm honestly, who really cares? You're 18, lose all your money for the next 2 years, and then mature up, and then you'll figure it out maybe. So anyways, but I don't think that you're like that. So I would suggest a moderate account. That's going to allocate 30% into those bonds, and then 60% into those stock ETFs. And most people, I honestly don't think you're what kind of ETFs am I going to be in? You can look that up on Acorns. It's pretty simple. So those ones are going to be, and it will tell you what the top 6 ETF or stocks that you will be investing in. And then same thing with the bonds, except for the government bonds, they'll just be United States Treasury bonds. And so the reason, why? The reason behind it all The Acorns app is pretty much just supposed to run itself, so it should have like very minimal effort on your end to run the app. So you shouldn't have to do a whole lot. You should be able to like set up like you already have your daily deposit and then your roundups, and you should be able to just kind of set it and forget it and come by and check it, every month or 2 months, or I mean, you could check it daily, but it's not really going to change a whole lot day to day. So you could check it whenever you want, but you're not going to be doing a whole lot of like buying and selling. You're going to set it and kind of forget it. And that's the thing that I like most about Acorns compared to like Robinhood and Stash, is that the Acorns app is super, super easy to use and super user friendly, especially if you're a beginning investor. And like that, hands down, like a beginning investor, I'm like, go try Acorns and then like maybe branch into Stash or Robinhood. Once you kind of understand like making daily deposits, that there's fluctuation in the market, and that what you're buying is actually like stocks and bonds, and that, once you understand the basic principles, then it's okay. Like maybe you can go into Stash or Robinhood, but Acorns is perfect. Yeah. So the reason why I recommend a moderate portfolio is because I would rather have an account that I can set and forget and not worry about a whole lot of fluctuation, and that can get a consistent return. So I'm looking at it from like the standpoint of like, hey, if we were to have a downturn or a correction in the market, like, do I need to look at that account and be like, okay, I need to pull out some of my money, I need to sell some of my shares, or is it one of those where I'm like, hey, you know what? It's going to handle itself. I'll just keep on doing what I've been doing. Like I got everything set up the way that I want it, and I'll just continue putting money in. And then when the market recorrects itself and starts heading back up, I'll be on the rise, and I'll feel pretty good about myself. Whereas if you were just solely invested into an aggressive portfolio and we had a correction, a large correction or whatever, and half of your portfolio disappeared, like how would that go over for you? Would that like make you want to pull out your money? I know that it probably wouldn't want to make you put more in. So that's all I'm saying. So first of all, like, and that was point number 2 that I just like skipped over, is assess how much risk you can handle. And for everybody, it's going to be different. For me, I could honestly do an aggressive portfolio and be fine. Like, I don't have a real issue with up and downs. I kind of understand that that's the way the market works. But some people, like, it's their money and they want to keep it safe. Me, I'm like, hey, this is already allocated to this per month, so I can just continue to put it in. And, in 40 years from now, I know that I'm going to have more than what I probably started with. So, however, I like the fact that a moderate account will keep it more safe and less volatile, so less up and downs. And, I think that people get into the aggressive portfolio to try to make a quick buck. They're trying to generate income over the next 2 years or something like that, which honestly, if you're trying to do that, like, more props to you. Go for the aggressive account. You're probably not going to get as much as you would if you did a solely Robinhood account where you invested into penny stocks, but you're not going to lose as much either. So what we're really interested in is compound interest, and compound interest takes a lot of time to develop. So, the first 10 years, you might not get huge returns, but the next 10 years, you're going to get huge returns compared to the first 20 years. And then the second half, so the last 20 years compared to the first 20 years, you're going to get huge, even bigger returns than you would on the first 20 years. So that's what we're looking at. We're looking at compounding that. And so if we can preserve a lot of our capital to compound that, it really makes sense as we get older to try to preserve as much as we can to have it compound. Plus, like I said, the books that I've been reading, stuff like that, talk about it being smart and a safe. An intelligent investor is someone who allocates at least 25% to those bonds. And that can range from either 75% to bonds to 25%. So you want the opposite to happen. So 25% in bonds, 75% in stocks. 30% in bonds, which is what a moderate account is set up for, 60% in stocks. So I hope that kind of gives you some pointers. I know that you're like, wow, that's probably a lot of information, but continue what you're doing. Change over your account to the moderate, if you feel like it, change it over to that moderate account, and then just continue what you're doing. And honestly, I would be interested to see in 2 months where you're at and how much interest you've gained, how much you made, or if you've lost money, or what exactly, how your account looks in 2 months or so. Anyways, thanks for watching. Let's go ahead and dive into the question of the day. And this is, if Jella has blue hair, would his body hair armpits, arms, legs, armpits also be the color blue. If it's naturally blue, then I think it's possible that all of his hair could be blue. However, most people dye their hair, and so they don't dye their arm hair and leg hair and that kind of stuff. So, logically thinking, if someone has red hair, usually they have red arm. So if it's natural, then yes. If it's not natural and dyed, then no. I guess it's pretty simple. Anyways, if you have any questions regarding Stash, Acorns, or Robinhood, as well as general investing advice, business, Etsy, or coaching, feel free to post your questions down below, and I will always get those on the next episode. And until next time, don't forget to subscribe up here and check out, if I'm in college, what portfolio should I use? And then check out this other video right here. And until next time, thank you for watching. I really appreciate it.